Hello everyone. This is the pre-market report video for 21st February 2023 in terms of Nifty and Bank Nifty. Last night US market was on holiday, but other Asian markets and European market was open along with the Indian market. So first, let's have a quick look on what happened on Indian market and European market yesterday, and then we can discuss about what we can expect today. Yesterday, Nifty opened positive of 20 points and within 15 minutes it dropped around 50 points, and in the next 15 minutes it gained around 60 points, and then till 11 o'clock it maintained around 17,950. Then it started to slide gradually to over 100 points. Even the positive European market opening didn't support at all, and the selling pressure on banking index heavyweights pushed down the Nifty and closed just below 17,850. For example, both Sensex and Nifty dropped by just around 0.5%, whereas Bank Nifty dropped over 1%. Then yesterday too, FIA did net sold, but not much. Actually, they sold shares worth approximately 160 crore rupees. So at just DII, the net bought shares worth approximately near 85 crore rupees. But here it's worth to note, for the last 2 days, yesterday and on last Friday, the trade volume of FII was near only half of it what they normally do. For example, usually every day they trade for 7,500 to 8,000 crore rupees, but for the last 2 days they traded only for 4,000 to 5,000 crore rupees. It's little bit odd. Yesterday low trade volume, it's understandable since US market was on holiday, but low trade volume on Friday, it's kind of indicating that they were waiting for something to happen. Anyway, the takeaway here will be that FII is trading less compared to their usual volume. Again, yesterday before our market opening, early morning Chinese central bank kept their interest rate as unchanged, same 3.65%. This made most of the Asian markets to trade positive and close positive. Then coming to European market, it opened positive but ended the day on a flat note. However, US future market is trading 0.3 to 0.5% negative. In terms of oil, most of us know that at present there is a US sanction on Iranian oil. From the start of this year, there was an expectation that US is going to lift the sanction, but yesterday there was a report released that there will be a delay in lifting the sanction. This made the oil to increase around 1%, and at the time of this video, WTI crude oil was trading near $77 per barrel and Brent crude oil was trading around $83.5 per barrel. Then regarding SGX Nifty at 3 am Indian Standard Time, it closed at 17,886, which is kind of indicating again 30 points gap up opening today. So that's all about what happened on yesterday. Now coming to today's Indian market related info. First, at present in India, many coal import based power plant has been underutilized or running at the lower capacity due to the financial debt restructuring plan. Yesterday in the aftermarket hours, Indian government invokes the emergency law to force all the coal power plant to run full capacity since the weather forecast will be a much hotter summer in India and thus expecting more power requirement. They said that companies can trade those power in power exchanges. I consider this will benefit Tata Power, Adani Power, IEX and Coal India. Let's see. Then the second item I like to highlight is regarding Vedanta. Actually, on last January 19th, Vedanta announced that they are going to sell their zinc related assets in South Africa to Hindustan Zinc for near $3 billion. Hindustan Zinc stock price has been fell over 15% from the day the deal was announced. And now yesterday, Indian government rejected the deal as it wiped out all the cash reserve in the company. Just for info, Indian government owns 35% of the company. So as a summary, at present global momentum is marginally negative. But as I said, there are some positivity in SGX Nifty. And also there was a rise in metal price, so metals and IT looks good. Regarding banks, there are some news that bankruptcy cases were raised by 25% from near 7 lakh crore rupees to over 8.3 lakh crore rupees. And I don't know which bank and who are all those 8.3 lakh crore financial creditors. So it's kind of negative, but we may argue that NPA, whatever they released in the quarterly statement was very low. Yeah, again, that's too true. Anyway, the takeaway here is that 25% more companies filed bankruptcy in the last quarter and it's burden to those financial creditors. Then regarding the items we need to look out, there is no scheduled release that I am aware for India particular. However, during our market hours from 12:30 pm to 2:30 pm, there is a schedule for release of various European countries PMI data such as UK, Germany and Italy. Here UK and Germany are the important one, and as long as there is no drastic change, we don't need to worry too much. Coming to technical, Nifty forms a long bearish candle on the daily chart with a minor upper and lower shadow that breaks the important support at 17,900. This pattern can possibly indicate the resumption of downside. The next downside levels to watch out will be around 17,750. Breaking that can accelerate the downside more towards 17,600. However, there is a possible reversal and it can be confirmed only say if it crosses the 18,000 mark again. In case of Bank Nifty, it forms a 3 black crow candlestick formation. As per candlestick formation and analysis rule, 3 long black candles were formed with consecutively lower close. This pattern suggests that the market had been at a high price for too long and the investors are beginning to compensate for it. So it's a strong bearish reversal pattern. Then as a moving average summary for Nifty in daily chart, yesterday it drops below the 5, 10, 50 and 100 day simple moving average. Then in case of exponential, Nifty moved below 5, 10, 20 and 50 day moving average. So 8 against it and 4 in favor of, which is technically significant negative. So as a moving average summary for Nifty, it turns to sell signal. However, in case of technical indicator summary, it's same and strong buy as more number of technical indicators are indicating the buy signal. And the RSI value dropped to 47. Then in case of Bank Nifty, it's same as yesterday. The situation is much worse compared to Nifty. For example, at present it trades only above the 200 day moving average. Thus, as a moving average summary, it's a strong sell signal. And in case of technical indicator summary too, it's a strong sell signal. And RSI value is around 37.5. Then from option change in open interest, there was a huge number of significant new call option open interest were added at above 17,800. And 17,900 got the new maximum nearby call options added, followed by 18,000. So 17,900 is the immediate resistance, and if it breaks, then 18,000 is the strong resistance. Then regarding overall options open interest data, 17,900 got the significant short straddle and the maximum nearby put option open interest is at 17,500 and 17,600. So 17,600 is the immediate support. Then coming to Bank Nifty, based on change in open interest, again it's similar to Nifty. Significant huge number of new call options added at above 40,500 and some put option unwinding took place at 41,000 and below 41,500. It's difficult to conclude anything here. And based on overall options open interest data, maximum nearby call option open interest with less short straddle is at 41,500. So 41,500 is the resistance to break, and maximum put option open interest with less call option open interest is at 40,000. Thus 40,000 is the support to look out for. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.